Well, we heard President Trump speaking there to the assembled media as he's preparing to depart, making a few points there. He's very upbeat about the progress of that crypto bill, or lack thereof. Crypto week appearing to suffer some setbacks, but the president saying that he was actually encouraged that a number of the lawmakers who opposed that, in fact, did want to see the legislation strengthened. Also praising the progress of some of the trade deals that we've seen so far. Of course, we heard there has been some progress in terms of striking an agreement with Indonesia. Indonesia will be facing a 19% tariff, but agrees to spend billions on energy infrastructure. Also agrees to buy 50 Boeing jets as part of that trade deal as well. We are yet to hear from the Indonesian side when it comes to that agreement. But in terms of Boeing, we did see a reasonable pop during normal trading hours. Boeing was, however, unable to sustain those gains, closing for the day slightly lower. But the president there answering a few wide-ranging questions at the assembled press gathering.
Yeah,
Heidi.
talking about some of the smaller nation tariffs to be set out in one letter. He's talking about this idea of a blanket tariff over 10% for small nations. It'll be interesting to see which nations are sort of part of that, given that we know that 10% tariff was also affecting the likes of Australia as well. That letter, President Trump saying, will soon be released when it comes to these smaller countries. He's very happy when it comes to how the deals are sitting the way that they are. They're also commenting on the chips tariff timeline as well, similar to Pharma and less complex. The issue, of course, we've seen with Pharma is that he's sort of thrown out this idea of a 200% tariff when it comes to pharmaceutical imports. That's another one that's going to be hugely impactful on Australia if that does come to fruition. Saying that he'll start off low, though, when it comes to pharma tariffs. We don't know what that level will be, but, you know, that will probably start at the end of the month. So it does sound like more volatility will be coming when it comes to the tariff front there, given that we still have so many uncertainties, major deals when it comes to major trading and security partners like South Korea, like Japan. Still not done yet.
Yeah, no fire and brimstone there when it came to the Fed, though. I was kind of waiting for that, following those CPI numbers that we had. I mean, there was something for everybody in those numbers, really. The headline figure, well, showed, a gain, but once we dig a little bit deeper, some of those tariff-exposed products do look as if they are rising in price. Those numbers flattened a little bit due to weaker car prices for both new and used, but plenty for the wait-and-see crowd to consider on the Fed board when it comes to the next move and the next Fed meeting just there at the end of the month.
Yeah, and so much of that depends on, what happens with this tentative trade truce with China, right? Does it hold? Do we continue to see kind of ongoing relative stability in the Chinese economy? Or do we start seeing the revival of price pressures, much of which might actually end up being exported as well, right? So a lot of uncertainties. But you mentioned about the Fed, because we've seen President Trump take almost at every public speaking opportunity to mention how displeased he is with Chair Powell, how he thinks that they should have cut rates, how things should have been played out very differently. There's certainly huge implications when it comes to what we potentially expect from if there is a far more dovish appointment from President Trump. So just recapping sort of some of the things that we do know, of course, is the Indonesian goods to face that 19% tariff under a new pact. So there is some progress being made with some of these countries. We know that the key ones when it comes to places like Japan, of course, EU still very much in progress there. But certainly if you take a look at the setup for markets, it looks like we're approaching with some trepidation some of those Fed bets, as you mentioned, as a result of the something for everyone CPI read, very much pulling back, but it does look like a cautious open with those easing bets kind of being trimmed, and just a few months left of the year now.
Yeah. The president also has some remarks on oil as well. He was questioned there as to whether or not he felt tougher sanctions on Russia was going to affect US consumers. Saying he was doubting that. He said he does think Putin wants peace, but he has not spoken to President Putin since the announcement. He's giving him 50 days. He doesn't think that's a very long time, but certainly the plan to end the war within the first 24 hours of his presidency, well, that hasn't come to fruition, has it?
No, and a lot of things are very much still in flux, right, including we haven't even sort of touched on the geopolitical side in terms of what's going on with the Gaza ceasefire, as well as progress on Ukraine, some very sort of interesting reporting on Ukraine in terms of just sort of how much support we're seeing from President Trump to Zelensky and the Ukraine war effort now, perhaps to try and put the squeeze further when it comes to sort of pushing Russia to make more of a conciliatory effect. Let's bring in John Haidi now to get a reaction to what we're seeing, what we heard from President Trump. So what was your takeaway, given a pretty sort of expansive set of comments there on the progress being made on trade, John?
Well, another day in Washington, yet more announcements and uncertainty, perhaps, over tariffs. The president, of course, announced that there would be pharmaceutical tariffs coming on August 1st, which, of course, happens to be the deadline that many trading partners were given before tariffs, the tariff regime, would go into effect, and giving them just a couple of weeks to perhaps come up with trade agreements. This was after the president announced earlier today that an agreement had been reached with Indonesia, and it would be 19, which had agreed to, according to the president, 19% tariffs with no levies on products in the United States.
Yeah, in terms of Indonesia, John, we've not really had any reaction from the Indonesian side yet. Is this shades of what we saw with Vietnam as well, in terms of a little bit of confusion from the other party in this trade agreement?
Well, that's yes. The leaders of Vietnam would probably agree with you there. This will mark the fourth accord that has been reached after the UK, China, and Vietnam, but none of those deals have been completed. But President Trump has said that the agreement with Indonesia would include agreement by Indonesia to buy $15 billion of energy, $4.5 billion of agricultural products, and 50 Boeing Corporation airplanes, which would be very good news for that company after, of course, a series of crises and various sorts of troubles, but of course, given this whole trade turmoil or tariff turmoil, Boeing was threatened by the EU with tariffs if President Trump follows through on his threat to impose steep tariffs on the bloc.
John, there's some pretty major kind of gaps that remain to be filled when it comes to major trading partners, right? We're thinking likes of South Korea, of Japan. We don't know if this trade truce with China will necessarily hold as well. Are we still seeing President Trump really pursuing this, everything on the table, including trade in exchange for geopolitical and security concessions? Does that complicate negotiations, do you think, or does it potentially give the US more leverage?
It doesn't, well, it depends on which side you're on, I guess. But the president has said lately that he seems not to care so much about deals, that he wants to see actually revenue from tariffs. But then but at the same time leaves the door open for negotiations, for agreements with the trading partners. At the same time, his team seems to be still pursuing talks, and the Indonesians who were here, in Washington, they pursued an agreement and apparently have achieved one. Of course, as you point out, the Indonesian government has yet to respond formally.
John, the president, however, hailing that deal, Indonesia, I believe, the 16th largest economy in the world. But there are bigger deals to come, namely India. Let's hear what the president had to say, and then I'll ask you for your reaction to that in terms of what's next.
We insist on opening up the country, which is a big deal. Indonesia was great. He's a great president. and we made a terrific deal where they opened up the entire country to trade with the United States. We weren't allowed to go in and trade. I think something similar will happen with I would say, India.
All right, so the president there foreshadowing what he would like to see happen next, John. So how is progress in reaching a similar sort of deal with India?
Well, the talks have been going on for some time now. It seems as if the president, or Mr. Modi's government in India is eager to reach an accord with the United States. Now, at the same time, we should point out that many countries, many trading partners of the United States have pursued accords, agreements with other entities. For instance, Indonesia, even though it seems to have reached this deal, much more favorable deal than what had been threatened, a 32% tariff, last weekend reached a tentative agreement with the European Union. So a lot of these countries are perhaps looking elsewhere to, and of course, China, of course, is an enormous player in Asia and around the world. Some of these partners in Asia, in Southeast Asia, are caught between that conflict, a clash between the United States and China. So there are many factors that these partners, trading partners, including India, have to weigh as this August 1st deadline draws ever nearer.
All right, Bloomberg editor John Haidi there. Let's stay with trade, and U.S. Treasury Secretary Scott Bessent saying talks with Beijing are in a good place. Markets shouldn't fixate on that date of August 12th, which is the date that the current tariff truce is set to expire. Now, he also told us the agreement to let Nvidia resume selling its H20 AI chips to China was part of the broader negotiations.
I can tell you the one thing that we do not want is a digital Belt and Road springing up around the world because other countries or China are substituting for our American chip manufacturers.
This is the same chip, though, that the Trump administration blocked with export controls in April. So why the change in policy now?
Anne-Marie, you might say that that was a negotiating chip that we used in Geneva and in London.
So this was part of the trade talks when it comes to Washington and Beijing?
Yes.
Was it a quid pro quo then? As you said, it wasn't, but was it potentially to make sure that you can get the licenses when it comes to rare earths?
Yeah, I think it was all part of a mosaic. They had things we wanted, we had things they wanted, and we're in a very good place. I expect to meet my Chinese counterpart, the vice premier, in the next few weeks.
So when and where will that meeting take place?
We're still working on that. The Chinese leadership has a big conclave at the beginning of August, so we're trying to work out whether that could be in a third country before or after that conclave.
Will the administration release the framework of the Geneva and London talks?
Well, we have released some of it, and I'll tell you that now having settled on tariffs, on the export controls, we can move on to the next stage of talks. And I think it's very important, both for the global economy, for the U.S. economy, and for the Chinese economy, for us to move on and talk about China opening its markets and the increased domestic and consumer production there.
Are you hoping to get to that next phase before August 12th, when that's currently the détente between these two economies?
Yeah, I think we're in a very good place, and I tell market participants not to worry about August 12th.
U.S. Treasury Secretary Scott Bessent there speaking with our colleague Anne-Marie Jourdan. Australian Prime Minister Anthony Albanese seems to have successfully sidestepped issues around security tensions while in Beijing, keeping the focus of his China trip on business and trade opportunities. For more, let's bring Bloomberg's Michael Heath. And Mike, I had to have a chuckle just reading the sweeping praise that we saw across state-run media, the China Daily editorial really saying that the Prime Minister has a much sort of better and clearer understanding and engagement with China than his predecessor, Scott Morrison. I mean, I suppose if that's sort of one way that you can measure the success of this trip.
Yeah, well, that's a pretty low bar, Heidi, isn't it? Given that the Chinese and Chinese officials wouldn't pick up the phone to Australian officials then. So, yeah, it has improved. But what seems to be fairly consistent is Albanese's trying to sort of compartmentalise here and to just keep, even his commentary on anything to do with security, whether it's the China's circumnavigation of Australia, there's a lot of one-word answers, or what's going on, on the South China Sea and these sort of things, or Taiwan, and where he's quite effusive on the whole trade side and meetings with business leaders and that sort of thing. And China seems to sort of he's made it fairly clear what he's trying to do, and China seems to have picked up on that, and they're quite reasonable with it. On the other hand, too, China's had quite a few problems diplomatically with a lot of its neighbours. So having an Australian Prime Minister there have a successful trip is in its interests as well. So there's a bit of a meeting of minds there. But what sort of looks to be happening a bit is that everybody, sort of from some of the clips and conversations you were showing before, whether it's Japan or South Korea or Australia, these countries with US alliances and big trade relationships with China, they're sort of trying to wait to see how the new equilibrium will form, kind of thing.
Yeah, the mantra from the Australian side is always, cooperate where we can, disagree where we must. So what are the areas of cooperation, and to what degree could the significant areas of disagreement derail those places where cooperation can be achieved? Yeah,
Paul, look, I mean, it's a really, really complicated one, because on one hand, obviously you've got a pro-West and pro-US democratic government, and China pretty much the opposite. But they do have a lot of overlapping interests. I mean, China's a massive steel producer. We're obviously a huge iron ore producer, and they've agreed to sort of cooperate and talk more closely. So Australia's got more of a sense of what's going on with China's steel side, and our miners can plan a bit better there. A lot of efforts in tourism and basically, China's done obviously so much construction. There will be limitations on the resources side and how much bigger that can get. So Albanese has been really pushing the people-to-people side of things. I mean, as he mentioned, there's 1.4 million people in Australia who trace their ancestry to China. It's great for relations. So he's trying to push tourism. One of the curiosities with tourism is that Chinese tourists who come here tend to find that they like quite high standard tourism facilities, and Australia's services aren't as good as perhaps they're used to. So we'll have to lift our game a bit there. But yeah, look, it does seem to have been a meeting of minds there. The Chinese are happy to keep that aside and keep the US relationship compartmentalised as we are, and try and focus on what they can agree on. But certainly Taiwan, certainly China's more assertive stance in the region. These are issues that are going to crop up, and Australia's just trying to keep them behind closed doors, I think is the main point.
Always a fine line, but it seems like, at least for now, it's been tread quite successfully. Bloomberg's Michael Heath there with the latest wrapping up Prime Minister Albanese's trip to China. But coming up on the Asia Trade, we'll be talking market strategy with BlackRock and Stanchart. Also on the latest when it comes to chips with Futurum Group, and when it comes to Albanese's trip, the debrief from the Australia-China Business Council, giving us that inside view on Albanese's visit to Beijing, what was discussed at that CEO roundtable. Much more ahead. This is Bloomberg. We are just getting some breaking news when it comes to Brazil and some of the trade woes that's happening there. The US TR saying that the Section 301 probe into Brazil commenced today, probing into whether Brazil's digital trade policies are unfair, the beginning of that 301 probe into Brazil's trade practices. We're seeing that announcement now from the Office of the United States Trade Representative in terms of some of the procedural things that will happen from here. They involve some of these sectors, including intellectual property protection, anti-corruption enforcement, some to do when it comes to unfair and preferential tariffs as well, saying that Brazil has lower tariffs in an unfair preferential basis by entering into some of these preferential trade agreements with certain large trading partners to the disadvantage of the United States. We know that this trade relationship with Brazil and the US has really been disintegrating in the face of increasing Trump tariff threats as well. Brazilians have really kind of pushed back, including the leadership, calling these tariffs unjustified. The potential sort of impact when it comes to some of these sectoral and specific sort of corporate tariffs as well, including that on Embraer, would be quite significant given the threats of around 50% there. White House AI advisor David Sachs is defending the Trump administration's easing of chip curbs on China. He tells Bloomberg that the move will help US chip giants stay competitive and counter efforts by Huawei to gain a bigger slice of the global market.
We still have a policy of not selling our state-of-the-art advanced semiconductors to China. And the H20 is not that. It's a heavily deprecated chip. And that's why the Biden administration allowed the sale of the H20 to China. And this is a continuation of that policy in the larger rubric of the trade negotiations that Secretary Bessent was talking to you about. So this is a heavily deprecated chip. I think that, like Secretary Bessent said, there are some things that China wants from us, there are other things we want from China, and this was all part of the overall trade negotiation.
David, you advised the president on AI policy as well as crypto policy. Do you have any sense of when he met with Jensen Huang last week at the White House, what case Mr. Huang made to the president that it was the right thing to get the American technology stack back into China?
Well, Jensen's been making the case publicly for competing in China, and I think there are a lot of merits to the argument. If you look at developments over the past year, Huawei has advanced very rapidly. They have a new technology called Cloud Matrix, which networks together 384 of their Huawei Ascend chips. Now, the Huawei chip is not as good as the Nvidia chip. The Nvidia chip is 3 times more powerful, but if you network together enough of those chips, you can brute force your way to a similar kind of result. And that is what Huawei has been developing, is this Cloud Matrix 384. And there have been reports, including from Bloomberg, that they've started exporting that technology, or they've been seeking to export it. So Huawei is becoming much more competitive. And if you give the whole Chinese market to Huawei, it's a huge subsidy for their R&D, right? And it basically forces Chinese companies that might be willing to use the H20 to use the Huawei chip and to basically figure out the bugs, work out the kinks of the Cloud Matrix system, and help Huawei scale that up. So I think there is a compelling argument here that you just don't want to hand Huawei the entire Chinese market when Nvidia is capable of competing for a big slice of it with a deprecated, less capable chip. Again, we're not selling our latest, greatest chips to China, but we can deprive Huawei of basically having this giant market share in China that they can then use to scale up and compete with us globally. So I think this policy is nuanced, and I think it makes a lot of sense.
White House AI advisor David Sachs is speaking with Bloomberg's Ed Ludlow. Let's get some more Washington's reversal of some of these China chip curbs. Our tech correspondent Annabelle Droulis is with us. So, Annabelle, what do we make of this sort of shift in strategy, and what are the really major ramifications for the likes of Nvidia and AMD? Have we had a reaction?
Yeah, well, I think we've certainly had a reaction, at least in the stock market, because you look at how those stocks, both of those fared in the session, and they were rising in the low single digits, but still, I guess, some sense of relief. I mean, both of these companies had flagged multi-billion-dollar write-downs, or in the case of Nvidia, multi-billion-dollar write-downs. But certainly what our Bloomberg intelligence team analysts are saying is that this is going to be something that really helps them recoup some of that lost revenue. It's also very interesting on the timing, and I don't think you can really look past this because, of course, the Nvidia CEO, Jensen Huang, was just in Washington meeting with President Trump. He's currently in Beijing, where he's headlining a tech conference there. So something that, of course, really helps as those trade negotiations, the bigger trade negotiations, continue between Beijing and also Washington.
This is kind of another signal of Washington's changing thinking around, how they approach the idea of tech competition, right?
Yeah, that's right. I mean, we've certainly seen a real shift over the past few months where it's less about the strategy of China containment and it's more about this policy of the so-called American stack. But what the US is looking to compete on is everything from infrastructure to the AI tools to standards to governance to essentially have American AI dominance, but around the world with other major economies. And so that is sort of that shift that you see the US really taking now, but has really been underway for several months, actually, really since they rescinded the AI diffusion rule, and then also those quite a reversal they made on software restrictions just a couple of weeks back as well.
Annabelle Jewell is there with the latest when it comes to what we're seeing from the sort of chip strategy side of things. We're also getting some more commentary from President Trump, and it was interesting. Paul was saying how he was quite refrained over the last hour or so when it comes to any comments on Jay Powell. He's now really been speaking about the multi-billion-dollar makeover of the Federal Reserve's offices in Washington, D.C., which seems to have been kind of the latest crux of the skirmish between the White House and the Fed. The cost of the building project going from $1.9 billion to $2.5 billion in recent years, and asked if this was a fireable offence. This is what President Trump said. I think it sort of is, because if you take a look at his testimony, both in the House and the Senate, it is underestimated. So he's talking about it being a big problem, the rise of that budget to $2.5 million, and that's $2.5 million now, potentially more money in $2.5 million to come. So President Trump really kind of saying his piece when it comes to the cost of this building project that has risen in recent years. It is something of a new line of attack for the Trump administration. Of course, we know that the president, the White House, were already unhappy with the Fed for its policy stance for not being more aggressive when it comes to cutting interest rates. Well, coming up, US banks kicking off earnings season. JP Morgan and Citi delivering strong results despite market volatility, though the case was not the same at Wells Fargo. We get the details next. This is Bloomberg.
Let's get to some other stories that we're following. The White House says President Trump was only asking a question and not encouraging further killing when he asked Volodymyr Zelensky whether Ukraine could strike Moscow. A source told Bloomberg that Trump quizzed Zelensky about whether Kyiv could hit the Russian capital and St. Petersburg if given long-range weapons by the US. And that conversation took place a day after Trump said he was very disappointed by a phone call with Putin. NATO Secretary General Mark Rutte has warned China, India and Brazil they could face US sanctions if Russia refuses to negotiate a peace deal with Ukraine. He urged their leaders to pressure Putin to engage in talks. The three countries have continued buying Russian oil and petroleum products in the years following Moscow's invasion of Ukraine. President Trump's nominee for UN Ambassador Mike Waltz has pledged to challenge China's growing influence if confirmed for the role. Waltz told the Senate Foreign Relations Committee that it's absurd China continues to be treated as a developing nation. He also said the UN should return to its core focus of preventing conflict, while slamming what he called pervasive anti-Semitism at the global body. Haidi.
Well, take a look at what we're watching when it comes to currencies at the moment, because we saw the dollar rising to the highest in 3 weeks after that US CPI print came through. It didn't provide fodder for an imminent rate cut by the Fed. All currencies in that G10 space weakening against the dollar, with the yen lagging the most behind peers. When it comes to the yen, we've also got really that options weakness, really traders bracing for potential further weakness against the dollar as we head into not just the sort of dissection of the US inflation outlook, but also Japan's upper house election and the fiscal uncertainty there too. This is Bloomberg.
Indonesia was great. He's a great president. And we made a terrific deal where they opened up the entire country to trade with the United States. We weren't allowed to go in and trade. I think something similar will happen with I would say, India.
We have been hearing more from President Trump when it comes to this ongoing skirmish with the Fed Chair Powell and the Federal Reserve more generally. And of course, we've heard his dissatisfaction when it comes to the overrun in the budgeting for the Fed's office renovations. And Paul, earlier on in that sort of same conversation or same sort of set of comments to reporters, we also had an update when it comes to Indonesia. President Trump saying that Indonesia goods face that 19% tariff under a new pact. US exports will not be taxed. So he's sort of in the context of that saying that he's quite happy with how some of these deals are going, but we know there are many, many more that are still up in the air.
Oh, absolutely. And the big ones of India and China still unsure. And in terms of Indonesia, we're yet to hear from the Indonesian side, which I'm sure is perfectly normal, but is anything normal at the moment? 90% tariff on Indonesian goods going into the US. Be interesting to hear the Indonesian perspective on that, although they are buying up to 50 Boeing jets as well. Indonesia says that it's preparing a joint statement with the US that's going to include or details of additional information. So we'll wait and see what the Indonesian side has to say about this.
$15 billion in US energy, $4.5 billion worth of agricultural products, and apparently he dealt directly with President Prabowo. So,
yeah. Well, you mentioned, Heidi, Trump also making some comments about Fed chair, and we've had a little more on that as well. The US Treasury Secretary Scott Bessent saying it'd be confusing for a former Fed chair to remain on the board once their term ends. So in an interview with Bloomberg, he did confirm that while President Trump has no plans to fire Jerome Powell, although that may have just been overruled by the president himself, the formal process to select Jay Powell's successor, that's already underway.
As President Trump said, he's not looking to fire Chair Powell, and as I've said, I'm not going to comment on future policy or future mistakes the Fed will make. I'll only comment on past mistakes. And look, they've had some big forecasting errors, and this may be one now.
Is there a reason for not firing him? And I ask that question because the president's also said that his term is about to expire in May of next year. Is that the reason to ultimately just wait? Or is it something else? Are you convinced by the negative consequences associated with such a move?
Look, I think an independent central bank is very important for the conduct of monetary policy, and we can see that in terms of both the financial markets, the term premium, and longer-term debt.
You said previously the interview process would begin later on in the fall. There's been plenty of speculation as to whether that process would be brought forward. Mr. Secretary, do you still, as far as you understand, believe that's when the interview process to replace the Fed chair will begin in the fall, or has a formal process already started?
Well, look, there's a formal process that's already starting. There are a lot of great candidates, and we'll see how rapidly it progresses. It's President Trump's decision, and it will move at his speed.
Do you see any merit at all in selecting maybe a candidate that's already on the committee on the FOMC versus taking a look at someone outside of the Federal Reserve?
Again, there are a lot of good candidates inside and outside the Federal Reserve, Jonathan.
Has the chairman himself, the Fed chair Jay Powell, given you any indication whatsoever as to what he would do once his term has expired? Will he vacate his seat as the governor of the Federal Reserve?
Well, traditionally, the Fed chair also steps down as a governor, and there's been a lot of talk of a shadow Fed chair causing confusion in advance of his or her nomination. And I can tell you, I think it'd be very confusing for the market for a former Fed chair to stay on also.
U.S. Treasury Secretary Scott Bessent there speaking with our colleague Jonathan Ferro. Take a look at how we're tracking when it comes to bonds, because obviously we had that reaction to what was a fairly sort of sedate set of CPI numbers from the U.S. This is sort of the Treasury's outlook as well as what we see when it comes to trading in Australian bonds as well. So much of the focus has been over kind of the concerns at the much longer end, right, the 30-year when it comes to the JGB outlook as well as Treasuries. We're seeing Aussie bonds kind of seeing some weakness there, following through from yesterday, given that we had some resilient China GDP numbers as well. Let's get some more perspective on bond markets. And joining us from Singapore is Navin, who is the head of fundamental fixed income for Asia Pacific at BlackRock. So the US CPI is obviously one thing to contend with, but this is building into a broader environment of concern for longer dated global bonds, be it you talk about treasuries or the fiscal outlook when it comes to Japan and JGBs. Is this something that you expect to persist?
Hey, yeah. First of all, thanks for having me on the show. US CPI, of course, seemed to have sent bond yields higher, but honestly, I think on days when there are important data prints and the market does something, it's almost always a reflection of the positioning going into the print. So I wouldn't read too much into it. I think the important takeaways from the data were that US CPI continues to moderate, albeit above the Fed's target. And I'll contrast that with another interesting data point, which is that one day before, you had India, another twin deficit country, with an inflation print that was well below the RBI's target. So I think this just goes to show that there's a huge divergence going on globally, and it's creating a great opportunity for fixed income investors, honestly, to source different types of return, different types of yields from different countries around the world. Income from the US and maybe some duration from Asia.
30-year yields are pushing above 5%. Do you see opportunities at the very long end?
I think there are definitely going to be opportunities when there are dislocated moves. I don't think we're necessarily there yet. There is a fiscal trajectory in the US that has been marginally concerning. I think there are forces that will keep the long end in check. There aren't a lot of long bonds available relative to the amount of wealth in the world. I think there will be a natural buyer for that part of the yield curve. At the moment, we like sourcing our income in the US from the front end because you're just not compensated that much at the moment for holding the long end. The cash rate's 4.5%, the long end at 5%. We're hoping for a bit more compensation there.
What about the view when it comes to JGBs? Because a lot of this is obviously the build-up of uncertainty on the fiscal picture front going into the upper house elections. Is that likely to kind of be smoothed over post-elections?
In my career, I found that the biggest opportunities are when there are big dislocations, and those tend to happen around major events. I think the election could be one of them. We are certainly on the lookout for dislocated pricing in the JGB market before or after. I think if that happens, we would be very interested to take a bite of that apple. The natural rate of inflation and growth in Japan is probably much less than the 3.2% at the long end of the JGB curve.
We've talked a little bit about India. Where else do you see potential opportunity within emerging Asia?
Yeah, I think it's a pretty rich opportunity set all around Asia. A lot of this is driven by policy divergence, which is leading to inflation divergence, growth divergence, and it's creating what you could almost call a desynchronized economic cycle between Asia and the US. So I think most of Asia falls in that category. We talk about tariff policy. Tariff policy at the margin, I would say, is inflationary in the US and deflationary in Asia. You've got more manufacturing capacity in Asia than the Asian market can absorb. So tariffs at the margin pressure bond yields lower. I think that makes for an incredibly rich opportunity set to build a global portfolio diversified across continents where you can source income from the US where inflation continues to be sticky. But I think the long end of the yield curve in Asia is looking quite attractive, especially in places like India where you have 7% yields. Indonesia has had a pretty massive rally and they've got a trade deal. I think there's lots of opportunity in the higher yielding part of the Asian market.
You mentioned the stickiness of inflation in the US. The market's pricing in 2 cuts, time's running out. Are you in that camp, or are you starting to change your view?
I think that's probably about right. The market will go from 3 to 4 to 1, but 2 is probably about right. Inflation data is one side of the coin. And when you look at the full picture of the Fed's mandate, the unemployment or the employment mandate is also pretty important, and we're seeing signs of moderation there. The labor market is resilient, and it will continue to be resilient. The question is just at the margin, Can you find room to cut 1 or 2 times in order to preserve the strength in the labor market today? We think the Fed will be able to find that room. There are signs of moderation in the labor market as well. Continuing claims, eking out small gains over the past few weeks, and at the bottom, at the lower end of the income spectrum, there's some nuances here, but I would say that immigration policy and certain pressures on the bottom end of the spectrum are creating some weakness there. And the last one is there is this long-standing trend of technology and artificial intelligence and investment that keeps going into that area. And eventually we will see, I think, some jobs being displaced. New jobs will be created. We're not particularly concerned, but there is a nuance there.
You mentioned a moment ago the opportunity presented by having a diversified portfolio, including Asian bonds and treasuries as well. Can you give us a bit more of a description on what exactly that looks like? What sort of weighting does each allocation have?
For sure. I mean, we are starting with yields, treasury yields, and sovereign bond yields that are above the historical average. And when you tack on a little bit of spread to that, you can source that risk from the US, you can source it from Asia. You're easily able to achieve portfolio yields, global diversified portfolio yields of about 6 to 7%. That's running at 3 to 4% above US inflation. So that's a real rate of 3 to 4%. I think that's a very comfortable buffer for a fixed income investor to just keep clipping that 6-7% coupon. And in terms of the diversified nature, you don't have to be crowded into the long end of the yield curve, which is what you used to have to do historically. You do not have to go down the credit spectrum, which is, again, something that you used to have to do in the 2010s, in the low interest rate era. You can pretty much be at the front end, not have to take a lot of risk to build this portfolio. And you can use building blocks from Asia, from the US, risk-free spread assets, securitized assets. That's another tool we like to use. I think it's one of the richest and most exciting investment opportunity sets for a fixed income investor in probably about 2 decades.
Navin, Saigal, really great to have you with us, Head of Fundamental Fixed Income at Asia Pacific at BlackRock. More ahead on the Asia trade. This is Bloomberg. Well, US banks kicked off earnings season on Tuesday, a strong showing with JP Morgan stock trading desk delivering a record second quarter. Meanwhile, Citigroup posting its best trading performance for this period in 5 years. Morgan Stanley and Goldman Sachs are up next, set to report later today. Let's get over for the season so far. Bloomberg's Matt Ingram with more. So we heard from Jamie Dimon saying that improving deal making boosted IB income. Who gains from this trend, particularly when we're talking about this part of the world in APAC?
Yeah, g'day Heidi. Look, JPM had a very strong performance globally in deal making. In Asia, they were actually very weak. There's 2 banks stand out in Asia this year. Nomura, extremely strong. They're up about 10-fold in the second quarter. Macquarie is also looking really good for deal activity. So Nomura and Macquarie on this side of the pond definitely look very healthy for investment banking revenues.
We saw a big bounce for Citi as well after that $4 billion buyback announcement, now record post-2008 high. Shareholders going to be happy with this or anticipating even better to come?
It's funny, Paul. It's probably a bit of relief for the patient, but you only need to go back to 2005, which for equity investors isn't that long, to see Citi's been a terrible stock versus its peers. JPM's a 6-bagger since 2005. Citi's down 85%. So I think for those long-term investors, they're going to want to see a lot more than just last night's rally.
Buybacks are kind of big news in the US broadly, right? Where else could we see this trend?
There's some really big buybacks happening in Asia, Heidi. DBS is one of the highest yielding developed banks in the world. HSBC and Standard Chartered have done extremely well on the back of big buybacks, and ANZ here, very well capitalised, extremely high dividend yield. So across developed Asia banks, we're seeing some really healthy dividend yields that are propped up by very good buybacks.
All right, that's Bloomberg Intelligence Senior Analyst Matt Ingram there. Let's get some more now on the Trump administration's call to let Nvidia and AMD resume selling certain chips in China. The decision, a dramatic reversal from the White House on measures that were designed to limit Beijing's AI ambitions. Joining us now is Wang, Research Director for Semiconductors, Supply Chain and Emerging Tech at the Futurum Group. Ray, thanks so much for joining us. I just wonder if you can explain for us what you see as being the impact on Nvidia's bottom line, considering this reversal. I mean, previously it was selling about $15 billion worth of chips to China. Can those sorts of numbers be recaptured?
Hi, Paul. Heidi. Good morning. Yeah, definitely. This is a huge news, not just for Nvidia and also for AMD, potentially other chip makers, right? In April, there's a new informal letter from BIS that restricted H20 from Nvidia and other chips that have similar capabilities in terms of memory bandwidth and networking speed. This is huge for Nvidia because now they can re-enter Chinese market with their H20 chips and also the upcoming B30 or RTX 6000D chips. They go into China, and this is significant upsides. Here in Futurum, we model together between B30 and also H20 that could bring potentially additional 7 to 8 billion revenue a quarter for Nvidia, and this is huge.
Well, if history's shown us anything, it's that the Trump White House can be somewhat mercurial in terms of its decision-making. How much confidence can Nvidia have, and AMD, that this reversal is going to be permanent, that it won't be reversed again?
Yeah, I see this policy shift as relatively permanent in a way that this is, number one, this is part of a negotiation with US and China. And I see there's a policy alignment between Nvidia and also the current Trump administration. Because remember, back into April, there's a contentious and tension between the administration and Nvidia because they couldn't really figure out the controversy around H20. But right now, after the policy shift, I see more policy alignment between Nvidia, the Trump administration, and also other AI chip makers.
Right, you're seeing on our screens at the moment the top 3%, Nvidia making up 3% of total global market cap. How much bigger can this company get given the presumed resumption of business in this key market?
Yeah, I think there's a still significant upside, right? Right now, we'll talk about let's say in Q3 and Q4, right? We'll talk about additional 7 to 8 billion revenue coming out from China, and throughout the rest of the 2025, we'll talk about 15 to 20 billion in the second half this year. And moving forward in 2026, I believe there's still strong AI demand in terms of AI training, AI inference coming out from China because we are seeing significant and rapidly developments in Chinese AI landscape.
Another way of looking at it is just how big Nvidia is when it comes to some very, very big countries. This chart showing that Nvidia is larger than Canada. If it adds another $1 trillion in market cap, it would be contending with the size of India as well. Paul sort of talked about some of the, policy uncertainties from the Trump administration. We know that, that is a tendency for this administration. But how much of this is really a watershed moment for Chinese policymakers? Does the sort of argument that the White House is making in terms of the advantages to the US make sense to you?
I think it actually makes sense because this really complicates two things. Number one, when you have more Nvidia chips right now going back to China, it's actually marginalized a lot of Chinese domestic chip makers, including Huawei, Cambricom, Haidi, Inframe, all those domestic AI chip makers, right? That really marginalize their potential market in China, right? From the Beijing's perspective, this will make the self-sufficiency push in AI chips even harder because right now there will be still significant reliance on Nvidia and AMD's solution in terms of AI hardware.
How long is that situation going to endure, though? Because while those curbs were in place, we saw China becoming very creative and not just finding ways to circumvent them, but also nurturing its own homegrown version of this. Are there any equivalents or better than the H20 chip, either in production or in development in China?
Well, I think in terms of H20, given the memory bandwidth importance for AI inference, I think for now, there's not much solutions right in China that is comparable to Nvidia. But this reflects to Nvidia's sort of medium and long-term concern, right? Because essentially they can only sell chips that under the new export control threshold, right? So in the long term, I do think there's a concern that there will be other competitors against Nvidia. But I think for now in China, Nvidia still will, maintain its technological and market leadership.
Is this a game changer for some of the homegrown AI, then, the likes of DeepSeek?
Yeah, I think this is definitely the one for number one, this gives them more compute, right? But this is the chips that is at least one generation behind Blackwell, right? And if you look at their computational performance and memory bandwidth, it's really not comparable to the current chips that most of the US companies are using. And I think another thing is this really complicates a lot of domestic Chinese chip makers because essentially they want to fulfill the market share they left by Nvidia. But right now, Nvidia coming back to the market, I think that makes things a lot more difficult.
Ray, really great to have you with us. Ray Wang, Research Director for Semiconductor Supply Chain and Emerging Tech at the Futurum Group. More ahead on the Asia trade. This is Bloomberg. We have had some sort of updates when it comes to the trade tariff situation with President Trump updating when it comes to the deal, the pact that has apparently, at least according to the US side, being reached with Indonesia. So that deal meaning that we'll see potentially 19% tariffs, but in exchange, no tariffs on US goods and, of course, the purchases of things like significant purchases of energy, of planes from the US as well. But as you mentioned earlier, we have not actually heard from the Indonesian side, despite an update saying that they've been negotiating directly with the leadership there.
Yeah, a joint statement apparently incoming as well. But in the wide-ranging press spray, as it's known, with President Trump just a short time ago, we heard the US is also now starting a Section 301 investigation into Brazil's trade practice. Now, these investigations are usually due to foreign non-compliance and violations of trade agreement. So that statement says Brazil's attacks on American social media companies and other unfair trading practices that harm American companies, workers, farmers and technology indicators. So that probe's going to look into Brazil's digital trade, electronic payment services, and of course the US not happy with Brazil over its relationship with Russia vis-a-vis the war in Ukraine.
We'll also be watching pharma stocks, and of course we know there's a lot of heavy weights here in Australia as well. It's one of the sectors that could really lose out. President Trump saying that he's likely to impose tariffs on pharmaceuticals as soon as the end of this month. He told reporters that the tariffs would start on the low end and then rise sharply after giving companies a year to adjust. And remember, just a few days ago, it floated the idea of having 200% tariffs on pharmaceutical imports coming into the US. So I do wonder where that low start is going to be. But the market opens are next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens, and Paul, of course, the front and centre is trade. We did have some updates when it comes to a pact apparently being reached with Indonesia, 19% tariffs, buying more US goods, and no tariffs on US goods as well either, but we're waiting for confirmation on that, and still, of course, a number of deals that are still out there in the ether.
Yeah, absolutely. Still waiting to hear from the Indonesian side on that agreement, although a statement apparently incoming, and President Trump remarking that, well, yeah, India are next out of the blocks, but wide-ranging comments from President Trump today. We've come to expect that, really, haven't we? Also talking about how renovations may be the undoing of J. Powell, potentially, and a Section 301 probe of Brazil's trading practices.
Yeah, the skirmishes continue on multiple fronts, right, as we head into the open. And for Japan, we are looking at a whole lot of sort of domestic indicators as well as domestic pressures here, be it you take a look at the yen, be it you take a look at what we're seeing with JGBs. But at the moment, with that market just coming online, looking like we'll build on yesterday's pretty tentative rally. Investors are weighing, of course, that JGB route, higher bond yields supporting financial shares in Japan, but a lot of wariness going into next Sunday's upper house election and the fiscal uncertainty that continues to drive the longer end of the Japanese bond market into further pressures. We're seeing the topics looking pretty flat at the moment. When it comes to dollar yen, that 148.75 level is where we're eyeing. Potentially we could see that 150 is not quite enough, as we've seen a number of election woes. With trade still being an uncertainty, there's now anger over rice prices, putting the ruling coalition majority in the upper house under threat going into the weekend vote. Take a look at what we're watching for Korea as well, given that some of the short positions have been climbing in recent sessions for the Kospi. The rally is spurring some demand for hedging. We've also had some commentary out for the likes of, I should say, Morgan Stanley lifting their Korean stocks target, citing the reform push. And of course, South Korea is also holding a meeting of the markets task force to seek finally that developed market inclusion in the MSCI as well. Paul, we'll be watching some of those chip names given this sort of US policy reversal that will mean China sales for the likes of Nvidia and no doubt have some flow-on effects when it comes to Asian chip makers as well.
Yeah, let's take a look at how we're tracking here in Australia. Also just opening for trade. Of course, the staggered open, hard to get a read on things, but some modest losses there on the get-go. One of the stocks that we're going to be watching will be Rio Tinto, probably start trading in about 7 to 10 minutes' time. Rio naming Simon Trotz as its new Chief Executive Officer, replacing the outgoing Jacob Stausholm. Also, we just got some production numbers from Rio Tinto as well. Second quarter iron ore shipments narrowly missing estimates at 79.9 million tonnes. Copper output also about 13% down on year. So Rio Tinto, the big miner, one to watch at the open. Also watching some of those US yields because we did, of course, get CPI numbers out of the United States for the month of June, rising 2.7% on year. That was a bit less than expected, but once you start digging into the data, well, really something for everyone there. Some products that are exposed to trade, such as toys, appliances, seeing the fastest rise in prices in years, but a decline in car prices keeping a lid on things. Not a great deal of change for yields there at the moment. The oil price also slipping a bit on US dollar strength and some doubt among traders over whether President Trump can successfully pressure Russian oil exports. Okay, well, let's get to our next guest now. Audrey Goes, Head of Asset Allocation at Standard Chartered Wealth Management Group. Audrey, plenty to talk about today, but I do want to start, if we can, with those CPI numbers out of the US. You still see 2 cuts coming this year. If we take a look at this chart on the Bloomberg terminal, though, now a bit of doubt whether one of those cuts is going to be in July, as expectations on tariff pass-through seems to get a lot of people thinking that inflation could be sticky. We've only got 3 meetings left after this July one. Do you really think we're going to get 2 cuts?
Yeah, I think we're still biased to 2 cuts for the rest of this year. If we look at the latest CPI print, that was largely in line with expectation. I mean, slight surprise on the headline perspective. But if you look at core CPI, they have been largely trading within the year-to-date range as well, really sideways here. And where we are seeing price pressure creeping up is really in the goods inflation segment, where we've seen the likes of toys, apparels, for example, clearly on an uptrend because of tariff-related price increases. But from a service inflation perspective, that's largely quite benign. And service deflation, inflation is still being led by decelerating shelter component, which is moderating, helping to moderate overall price pressure. And at the same time, if we look at labor market as well, the moderation in the labor market should also fit into overall, put a cap on price and service inflation as a whole. So net, beyond the tariff sector, we do feel that we see very little evidence of rising inflation expectations outside of the very, very near term, which is why we still remain quite comfortable that the Fed is likely to deliver 2 rate cuts from now to the end of this year over the next 3 meetings.
Well, we've seen a little bit of US dollar strength over the past few days, which is not something we've really been used to recently. Do you think the floor is in, or is there a little bit, based on what you said around rate cut expectations, could we see a bit more weakness going forward?
Yes, I think short term, I wouldn't be surprised if dollar continue to strengthen. I mean, we've been flagging that for quite a couple of weeks already, because if you look at investors' positioning in US dollar, they still remain quite net short, and overall sentiment is also quite bearish with regards to trade policy uncertainty. But over the longer term, say over a 12-month horizon, we're still biased towards the US dollar likely weaken over that period, and we are targeting about 96 on a DXY, primarily driven by, I think, widening sort of rate differential, and we're also expecting rate cuts in the US. At the same time, because of stimulus efforts in China as well as in Euro area and elsewhere in the rest of the world, we are likely to see slight pickup in terms of growth differential, say in the rest of the world versus the US, which is also likely to feed into a weaker US dollar and stronger rest of the world currency for that matter.
When it comes to trade uncertainty, a little bit more clarity when it comes to Indonesia with this announcement from the US side of a 19% pact being done. Does this alleviate some of the sort of uncertainty when it comes to Indonesian assets? Does it change your view when it comes to asset allocation for that market?
I think the trade deal clearly helped to ease uncertainty, because if you think about prior to this announcement, the actual tariff rates that might be implemented by 1st of August is actually about 32%, 33% thereabouts. So clearly 19%, I think that's lower than what is set to take place in August, and clearly helped to ease a lot of uncertainty on the trade front as well. So I do feel that as we continue to get more trade deals being inked between the US as well as Asian partners, that should help to ease and bring down marginal uncertainty, and will help the likes of Asia ex-Japan region to outperform, which is a key overweight for us going into the second half of the year.
Because that now comes on the back of the 20% tariff deal struck with Vietnam, right? Do you think the sort of clouds are clearing a bit more for these ASEAN manufacturing-heavy countries? Does it potentially make you feel more constructive on that whole area?
Yes, we do feel that with easing trade uncertainty, that will likely bring more, I would say, lower investors' anxiety with regards to emerging market, Asia and ASEAN region as well. I think the fact of the matter is investors are always worried by the unknowns, and clearly right now this is quite known out in the market already. So that should also help to bring flows back to the Asia region as we speak, also coupled by a weaker US dollar on the 12-month horizon. And hopefully we will also see yields on the US pressuring lower as we progress through the year as well, as labour market continue to moderate and soften.
I just want to get your views on the tech and chip space as well, because, of course, we've had the US reversing its decision vis-a-vis Nvidia and AMD and others selling advanced chip technology to China. We've got very elevated valuations, though. Do you buy at these levels?
Valuations are clearly one key hurdle for investors to be worried about. But the way we see growth-related sectors is, as long as the earnings continue to grow and deliver ahead of expectation, then some of these elevated valuations can still be sustained. I think what's really key checkpoint for us to look at is really the upcoming earnings season that will be that's already in progress, with the banks reporting its earnings over the last couple of days. And we'll really need to monitor to what extent does increased spending in AI investments by the hyperscalers, for that matter, really eats into margin and profitability. But for now, we still remain constructive on the tech sector, given their robust growth expectations.
Audrey, we've had sort of reasonable data points out of China, particularly when it comes to the impact on trade as we get this trade truce kind of holding for now. Obviously, second half is going to be difficult to gauge depending on what happens with the actual tariff and trade front with the US. But does that make you a little bit more interested in Chinese assets? What's your view at the moment in terms of opportunity?
So we are overweight on China equities. I think Chinese equities are supported by a few key factors. One is greater clarity in terms of trade. Obviously, is one of the first few countries where the US reached a trade truce on, so that's positive. Second of all, I think from a currency perspective, we are biased towards a weaker dollar, so that should also help to support inflows into Chinese equities, where valuation clearly remains at a big discount versus global equities, and clearly versus the US as well. And let's also not forget that the Chinese authorities is also stimulating the economy as well via rate cuts, as well as lowering of the RRR reserve ratios and selected subsidies on consumer goods for that matter, to really help to revive consumption. So net from a perspective of policy direction as well as valuations, we do believe that the Chinese equities looks quite attractive, and hence we are overweight on it.
Audrey, really great to have you with us. Audrey Go, Head of Asset Allocation at Standard Chartered. One of the sectors we will be watching, particularly here when it comes to trading, pretty active in Australia in this sector, will be pharma stocks. We are seeing that reaction already, downside of 1.25% from one of the biggest players, which is, of course, CSL. We're seeing some of the Japanese names, Sumitomo, Dainippon there, down by 1.4%. President Trump saying that he's likely to impose these pharma tariffs as soon as the end of the month, and that some of these levies will start off low but increase to a very high tariff after giving companies a year to build. He'd previously floated this idea of 200% tariffs on pharmaceutical imports into the US. So it's not yet clear in terms of where he's thinking a low base to start with, but clearly the pharma names trading so far in reaction are not looking very positive. We're also watching Asian apparel stocks. This again on the back of the 19% Indonesian tariff deal that was announced by President Trump, reduced to 19%, I should point out, from 32% under this new agreement. We're still waiting to hear confirmation from the Indonesian side, but the renegotiated rate certainly makes it the first nation targeted with higher duties in Trump's tariff letters to have their rates now reduced. So we are watching some of these apparel and footwear stocks in the near term. When it comes to Morgan Stanley, they're saying that the announcement of this deal should be a relief, that this major production hub of Indonesia is now similar to that for Vietnam, which of course, Paul, managed to strike that 20% tariff rate with the US.
Well, I mentioned Rio Tinto a little bit earlier. This is one of the big iron ore miners here in Australia. It's losing a little bit of ground at the moment, offered by 0.25%. A few headlines here. We do have a new CEO, of course, Simon Trott, the former iron ore division boss. He's going to replace Jacob Stausholm as CEO. Diversification is going to be one of his key tasks. Rio relies on iron ore for about 80% of its income, and on that note, iron ore shipments for the second quarter are narrowly missing estimates. Copper shipments a bit softer on year as well. And we heard from Gina Reinhardt as well, who's big in the mining space in Australia, saying Simon Trott, just the man to move Rio Tinto's headquarters from London back to Perth. Let's see if that happens. More ahead on the Asia trade. This is Bloomberg.
Indonesia was great. He's a great president, and we made a terrific deal where they opened up the entire country to trade with the United States. We weren't allowed to go in and trade. I think something similar will happen with I would say, India.
President Trump touting his trade pact with Indonesia and the potential for a smaller deal with India. Let's bring in our Bloomberg News desk editor, Jill Deesa. So, Jill, President Trump really seeing this as a win, right, with Indonesia, and it does build on a similar pact of 20% that we saw from Vietnam as well. It does seem like sort of, at least when it comes to ASEAN, some of the contours of compromise are now starting to take shape.
Yes, that's right, Haidi. I mean, I think in the grand scheme of things, goods trade with between the U.S. and Indonesia, it's something like $40 billion. So not one of the, the U.S.'s largest trading partners by any means. But what this does indicate, if they have indeed reached a trade pact with Indonesia, the U.S. has reached a trade pact with Indonesia, is a couple of things here. First of all, I think as you just mentioned a couple of minutes ago on this program, it would be the first instance of one of these countries receiving a tariff letter and then ultimately negotiating a lower rate based on that. That's something that I think we've been kind of wondering how exactly this was going to play out when Trump started sending out those letters. It did appear that that effectively marked a 3-week or so extension of the self-imposed July deadline that he had kind of set. Now it seems that maybe there is some negotiating room, potentially good news for other trading partners like the EU or perhaps others in Southeast Asia. All that being said, well, we have heard from Indonesia that we're expecting some kind of a statement in response to what Trump has laid out. It's part of this trade agreement. We still, again, don't have any kind of a white paper or anything like that. We also don't really have an official statement, kind of confirming a lot of the specifics of this from Indonesia. And I do want to caution that, after the trade deal, this trade agreement with Vietnam was announced not too long ago, we still haven't gotten a white paper out of that particular agreement. And then we did obviously hear, from people people familiar that Vietnam was kind of taken aback by that 20% tariff that was imposed on them, and that maybe they're still looking to negotiate a lower rate. So I think that's all just to say that, you do have the statement from Trump, obviously, but it very well may be that the situation is still a bit fluid, and I think we do need to wait to hear from Indonesia to actually get a few more details about, what we're ultimately expecting them to respond to in relation to this new tariff rate.
And Jill, let's talk a little bit more about the what's next, because President Trump did mention that they're working on something very similar with India. What more do we know?
Yeah, I think that, the India story is one that has been, at this point, feeling like it's going on for weeks and weeks and weeks. I mean, we've heard from Trump several times, I would say, within the last, week or so that they're close to a deal on India. Obviously, India is very keen to move forward on something. They're sending, trade negotiators to Washington to try to get something over the line. But again, it's a bit unclear about what exactly they're going to be able to negotiate. I do think that when it comes to some of these countries, it is quite interesting that, kind of wonder whether we're seeing sort of a shift up in terms of what the, sort of base level tariff rate, globally might be from Trump's perspective. I mean, when you're starting to see countries like Indonesia getting hit with a 19% tariff rate, Vietnam getting hit with a 20% tariff rate, obviously we have to see what's ultimately in store for somewhere like India, for example. But it does indicate that potentially we're seeing, these sort of base level tariff rates, or even what countries are able to negotiate, creep up higher than maybe the 10% or so that investors have ultimately been hoping for.
All right, Bloomberg News Desk editor Jill Desis there. Staying with trade, and US Treasury Secretary Scott Bessent says talks with Beijing are in a good place and markets shouldn't fixate on August 12, and that's the date that the current tariff truce is set to expire. He also told us the agreement to let Nvidia resume selling its H20 AI chips to China was part of the broader negotiations.
I can tell you the one thing that we do not want is a digital Belt and Road springing up around the world, because other countries or China are substituting for our American chip manufacturers.
This is the same chip, though, that the Trump administration blocked with export controls in April. So why the change in policy now?
Anne-Marie, you might say that that was a negotiating chip that we used in Geneva and in London.
So this was part of the trade talks when it comes to Washington and Beijing?
Yes.
Was it a quid pro quo then? As you said, it wasn't, but was it potentially to make sure that you can get the licenses when it comes to rare earths?
Yeah, I think it was all part of a mosaic. They had things we wanted, we had things they wanted, and we're in a very good place. I expect to meet my Chinese counterpart, the vice premier, in the next few weeks.
So when and where will that meeting take place?
We're still working on that. The Chinese leadership has a big conclave at the beginning of August, so we're trying to work out whether that could be in a third country before or after that conclave.
Will the administration release the framework of the Geneva and London talks?
Well, we have released some of it, and I'll tell you that now, having settled on tariffs, on the export controls, we can move on to the next stage of talks. And I think it's very important, both for the global economy, for the U.S. economy, and for the Chinese economy, for us to move on and talk about China opening its markets and the increased domestic and consumer production there.
Are you hoping to get to that next phase before August 12th, when that's currently the détente between these two economies?
Yeah, I think we're in a very good place, and I tell market participants not to worry about August 12th.
US Treasury Secretary Scott Bessent there speaking with our colleague Anne-Marie Jordan. More ahead on the Asia trade. This is Bloomberg.
Well, US banks kicked off earnings season on Tuesday with a strong showing. JP Morgan's stock trading desk delivered a record second quarter. Citigroup, meanwhile, posted its best trading performance for this period in 5 years. Morgan Stanley and Goldman Sachs coming up later on today. For more, let's get to Bloomberg's Matt Ingram. So, Matt, JP Morgan CEO Jamie Dimon was hailing improved investment banking and deal-making income. Can we see some flow-on for this potentially for the Asia-Pacific?
Yeah, g'day, Paul. Interestingly, JP Morgan's performance in Asia was actually pretty weak. Globally, deal making was very strong, as Jamie Dimon said. On this side of the pond, it's all about Nomura and Macquarie. Nomura's up about tenfold in the second quarter. Macquarie's has doubled. So when we're looking at revenues and investment banking for those two, they should be pretty strong in the half year end of June.
Citi shareholders should be pretty happy too.
Heidi, it's interesting. It depends how far you look back. If you're a long-term shareholder of Citi versus JP Morgan, it's been dreadful. It's down about 85% since its peak in 2005. Compare that to a six-fold increase for JP Morgan. So really, I think if you're a long-term shareholder for Citi, you're expecting a bit more.
So buybacks have been a feature of big news in the US, but could we see this trend potentially unwinding elsewhere?
Paul, there's a heck of a lot of capital slushing around Asian banks. DBS has one of the highest dividend yields of developed market banks globally, thanks largely to its big buyback. HSBC and Stanchart have been very strong this year again, thanks to big buybacks. And a bit closer to home for me, ANZ's dividend yield, again, very healthy, and a large part of that is buybacks. We're expecting more to come from the Aussie banks when they report results in August.
Wells Fargo disappointed on NIM guidance. Is there a follow-through for Asia?
There's two sides, Heidi, to the Asian banks on that theme. We talked earlier in the program about the BOJ and what they might do in the second half of the year. Japanese banks are massive winners from central bank moves, and their profits should be really strong and margins should jump a lot. HSBC and Stanchart have hedged a lot of their duration risk, so they're very well positioned as these cuts come through. But the Australian banks, very weak margins, particularly in 2026, thanks to the RBA's sort of 100 to 125 basis points of cuts. So it's really a mixed bag for the Asian banks on that theme.
Our Bloomberg Intelligence Senior Analyst Matt Ingram there as we get into the thick of financials and banking earnings season. Take a look at how all of this is playing through when it comes to Europe, which of course, despite some of the trade progress being made with Indonesia, we're still waiting on further progress on that EU deal. We saw in the previous session European stocks falling in light of that US CPI data. It does look like a continuation of a pullback. The rotation out of some of the top performing sectors was key. Banking, defence related shares have rallied so hard. We saw some pullback in the previous session. Also watching Asian apparel, some of the footwear makers in this part of the world really not seeing much of the advance that perhaps we would expected, given the US tariffs on Indonesia were reduced to 19% in this newly announced pact from 32% in this new agreement. So not a very muted reaction, in fact, to the downside when it comes to some of these names. ASICS, for example, looking flat at best. The likes of Morito Co. down by 0.8%. Contrary to Morgan Stanley analysts, Paul, who expected to see a positive reaction given some of the removal of uncertainty, but still obviously a tariff there.
Let's take a look at how some of the pharmaceutical names are performing as well. We've got CSL, the big one in Australia, off by about 2%. President Trump saying tariffs on pharmaceuticals probably coming at the end of the month. This is Bloomberg.
Take a look at what we're seeing when it comes to trading in Asian markets. A lot of cross currents, including some progress being made on trade with the likes of Indonesia, for example. We'll be watching that market when trading opens a little bit later, but still a lot of uncertainty in terms of what's left still to negotiate. We've got the upper house elections for Japan, which is clearly weighing on resentiment for Japanese equities, Nikkei 225, as well as the topics all looking a little bit softer, particularly with the pressure coming through from the JGB market there as well. The Kospi is down by 0.8%. Really, we're seeing some sort of rotations and short positions taking place over the past few sessions for Korean equities. We are also seeing downside when it comes to trading here in Australia to the tune of almost 1%. One of the sectors we're watching is pharmaceuticals, given some of these concerns and the clarification from President Trump that we could see pharma tariffs taking effect by the end of this month. Well, White House AI advisor David Sachs is defending the Trump administration's easing of chip curbs on China. He tells Bloomberg the move will help US chip giants stay competitive and counter efforts by Huawei to gain a bigger slice of the global market.
We still have a policy of not selling our state-of-the-art advanced semiconductors to China. And the H20 is not that. It's a heavily deprecated chip. And that's why the Biden administration allowed the sale of the H20 to China. And this is a continuation of that policy in the larger rubric of the trade negotiations that Secretary Bessent was talking to you about. So this is a heavily deprecated chip. I think that, like Secretary Bessent said, there are some things that China wants from us, there are other things we want from China, and this was all part of the overall trade negotiation.
David, you advised the president on AI policy as well as crypto policy. Do you have any sense of when he met with Jensen Huang last week at the White House, what case Mr. Huang made to the president that it was the right thing to get the American technology stack back into China?
Well, Jensen's been making the case publicly for competing in China, and I think there are a lot of merits to the argument. If you look at developments over the past year, Huawei has advanced very rapidly. They have a new technology called Cloud Matrix, which networks together 384 of their Huawei Ascend chips. Now, the Huawei chip is not as good as the Nvidia chip. The Nvidia chip is 3 times more powerful. But if you network together enough of those chips, you can brute force your way to a similar kind of result. And that is what Huawei has been developing, is this Cloud Matrix 384. And there have been reports, including from Bloomberg, that they've started exporting that technology, or they've been seeking to export it. So Huawei is becoming much more competitive. And if you give the whole Chinese market to Huawei, it's a huge subsidy for their R&D, right? And it basically forces Chinese companies that might be willing to use the H20 to use the Huawei chip and to basically figure out the bugs, work out the kinks of the Cloud Matrix system, and help Huawei scale that up. So I think there is a compelling argument here that you just don't want to hand Huawei the entire Chinese market when Nvidia is capable of competing for a big slice of it with a deprecated, less capable chip. Again, we're not selling our latest, greatest chips to China, but we can deprive Huawei of basically having this giant market share in China that they can then use to scale up and compete with us globally. So I think this policy is nuanced, and I think it makes a lot of sense.
That's White House AI advisor David Sachs speaking there with Bloomberg's Ed Ludlow. Well, let's get more on Washington's reversal of some of China's chip curbs. Our tech correspondent Annabelle Drillers is with us now. So, Belle, there are major ramifications for Nvidia and AMD. What's been the reaction?
Yeah, we certainly saw that reaction on Wall Street overnight because you had shares of Nvidia, for instance, rising nearly 10%. AMD still closed up more than 5% in the session. But the big headline, of course, is that you've had that big reversal from Washington around these sales of some certain AI chips to China. And so both Nvidia and AMD are going to start reselling those chips again. These are companies that have warned, in the case of Nvidia, but multi-billion-dollar write-downs for the quarter or for the reporting year. AMD as well. I mean, our Bloomberg economics or intelligence team is saying that this is something that could help them recover up to $900 million in lost revenue. They're companies essentially that are highly dependent on the mainland Chinese market. And you can see there that revenue from Nvidia to China, but direct revenue of 13%. So yes, it is going to have a big impact for the companies. You saw that reflected in the stock price, and very interesting timing as well to note because, of course, the Nvidia CEO, Jensen Huang, just met with President Trump last week. He's in Beijing this week as well to attend a tech conference. So the signaling around this move is interesting, and a big about face, of course, from the Trump team for Huang, given that he had spent so much time saying that the more you restrict US companies from selling to China, the more you incentivize Chinese companies to build their self-reliance.
It's interesting, this broad shift away from broad technological denial, right? What is Washington hoping to achieve from this policy reversal, or certainly a significant change?
Yeah, that's right. And I think maybe just the fact that you've sort of had that whiplash and changes just in a short amount of time maybe suggests that there's sort of some internal divisions within the White House around the approach, and some maybe at least more of the hawks still advocating for that stricter enforcement. But as you said, yes, it is a big policy shift, and it also signals how the US is thinking about slowing down China's advances, and that does come on what we see as dominance around who has the AI stack, essentially, for other countries outside the US and China around the world. So this is things like who's building on infrastructure from the US or China, who's using their chips, who's using their AI tools. That's where the US is really looking to compete. And so you saw, for instance, them going to the Middle East, signing these multi-billion-dollar deals. It's all about trying to bring companies, trying to bring governance onto US-led AI infrastructure.
Well, the chip equipment maker ASML is due to report later on. What are we expecting?
Yeah, this is going to be a really interesting one to watch, because we've seen ASML really feeling the pinch of restrictions on China. Of course, they are restricted and have been restricted and continue to be restricted from selling their most advanced EUV lithography machines to the mainland market. But we have seen that concern around China demand really being reflected in the stock price, which is down around nearly 30% actually over the past year or so. But the earnings today are going to be really closely tracked, because it's going to be that big question. Do we get any sense on the durability of demand? Is it going to be picking up from Beijing, given you've got as well these changing restrictions from the US?
Annabelle Drawlers there with the latest, and more to come here on the Asia trade. This is Bloomberg.
Australian Prime Minister Anthony Albanese seems to have successfully sidestepped issues around security tensions while in Beijing, keeping the focus of his China trip on business and trade opportunities. In his meeting with Chinese President Xi Jinping, Albanese reaffirmed his commitment to a positive and constructive relationship with Australia's largest trading partner.
Australia values our relationship with China and will continue to approach it in a calm and consistent manner, guided by our national interest, but which we regard very much as a relationship being positive is just that. It is in our national interest, and indeed in the interest of the region as well.
Our next guest runs the Australia-China Business Council, which represents 500 Australian companies with business interests there. He was also part of the Prime Minister's business delegation and attended the Australia-China CEO roundtable held just yesterday. Joining us now from Beijing is the Council's President, David Olsen. David, great to have you with us, and certainly timely to debrief on that roundtable and some of the engagement that's taken place. The sort of Chinese state media approach to this has been very positive in terms of some of the glowing reviews over this visit from the Prime Minister. Can you tell us about perhaps some of the deliverables or the areas of agreement that were reached?
Thank you and good morning. Yes, the press generally has been very positive, both in China and also in Australia. The whole point of this visit was not so much to re-establish the relationship after a difficult few years, but to find commonality, to work out where we can work together in the way forward. So there've not been, while there's a very big business delegation accompanying the Prime Minister on the delegation, it's not commercial outcomes that are actually the drivers. We're trying to seek commonality of interest, as I've said. So the first big outcome, though, was the signing of a new agreement around trade in tourism. Tourism is one of Australia's biggest trade sectors. It's worth about $9 billion Australian dollars every year. And the Tourism Authority in Australia and Travel.com, a big startup in China, agreed to reactivate that. So that people activity was a very significant part. The only other, so far, most significant commercial activity was a discussion that the Prime Minister led in Shanghai on Monday with four of Australia's top iron ore producers and China's top consumers of iron ore, the steel producers. And that was a very constructive discussion. It's the first time I think we've had in recent years a conversation about the importance of Australia's iron ore sector and resources sector to China. And there was real agreement there that there's an opportunity to work together to decarbonise the steel sector right across the value chain. Apart from that, many other sort of smaller MOUs have been signed by companies, but ultimately this is all about showing intent that Australia and China want to work together and that we have ambition to find ways in which we can do so.
Even within the commercial realm, and it's not always sort of clear areas for agreement, right? We heard that Chinese Premier Li Qiang apparently had redoubled down on efforts for looser foreign investment restrictions on Chinese businesses coming into Australia. Was that raised at all, some of the restrictions when it comes to FIRB?
So we had a large roundtable yesterday. We had 14 delegates from Australia, 14 from China at the most senior levels. Each went around the table with both the opportunities and the challenges. Certainly from the China side, a couple of the investors who have businesses in Australia talked about the business environment. They talked about their desire for it to be freer and more open. But on the other hand, I think there was a strong recognition that Australia's foreign investment rules, while there might be some circumstances where China has not been successful, but that they are broadly satisfactory. No major complaints about that. The challenge is really just to find the opportunities that can be worked through that meet the national interest test in Australia, which is exactly the same as happens for investment into China.
David, we do have to, of course, discuss some of the risks going forward because, you know, we saw in the past few years under the Morrison government just how quickly the wind can change. It wasn't that long ago Australia was suffering some quite severe trade strikes at the hands of China. Can you see a scenario where that might happen again, or has there been some discussion on this visit of getting some guardrails in place?
Well, the discussion around guardrails or building resilience is not something that's necessarily happened on this delegation, but over the last year or so, there's been very intense conversations in Australia about how do we continue to find that balance between maintaining a very strong economic relationship with Australia, which is critical to jobs, employment and prosperity, against the security and national interest aspects of Australia's foreign policy. The strategy that many companies have been adopting, which is the one that the government has been encouraging, is one of diversification. So China is still an important market, but look to other markets to manage the risk of over-reliance on one single market. That's all right in theory. The fact remains, though, that China is by far our largest trading partner. It exceeds in trade value the next 4 jurisdictions combined. So we can't look away from it. How do we manage that risk? Well, it's one of building resilience. And that's happening in different ways. For some, perhaps example in the iron ore sector, there's a lot of work around creating long-term partnerships, looking at that green iron ore supply chain right through from extraction, processing, export, and then the final steel manufacture, and working out where does Australia fit into that equation in that value chain to make it sticky so that the relationship is less likely to be subject to any adverse geopolitical issues. And that same scenario is applying across the board. In the agribusiness sector, we're seeing Australia's moving away from just being an exporter of high quality food and agricultural commodities, which we certainly will continue to be, but looking more at the more sophisticated ends of the relationship. Ag business, ag tech, how can we take Australia's services sector in the agricultural space to help China boost and make more efficient its agricultural sector? And we had, for example, a rice producer on the delegation who was talking about partnerships to share technology and information around the management of water levels for rice production. And this happens right across all the sectors. So I think, it's a story that's different for every company, but companies are well aware of the risks of over-reliance. They're well aware of geopolitical risks, and they're treading very carefully. We realize it can be fragile, but the opportunity is still worthwhile.
David, that's a good jumping-off point for our last question here. There is a review of the free trade agreement underway. I'm sure this is something that the Australia-China Business Council has some views on. What would you like to see changed?
Right. Well, we've had 10 years of remarkable success under the free trade agreement between China and Australia. We celebrate that in December of this year. What would we like to see in it? There's a number of areas where we know that both governments are starting to look at, and that's to remove some of the behind-the-border customs barriers, dealing with issues around traceability for products and how we use technology and digital systems to enhance our ability for our markets to connect to each other. That's one clear area. Broadly continuing the focus on the services sector, which is the growth area within China, as its consumers demand a different sort of service, and Australian companies are well suited to provide that. So looking at the new areas around technology that might need some work there. I know the topic is AI. Our Prime Minister has said that AI won't be the subject of the next round of free trade agreement discussions. I think the reality is that we get a little bit blindsided by the use of the term AI. Really, we're talking about AI, robotics, data, and a whole range of things, and advanced manufacturing, all of which are critically important to Australia's ability to connect to China. So whether that forms part of the free trade agreement, part of broader discussions, remains to be seen.
Okay, David Olsen, President at the Australia-China Business Council. Thanks so much for joining us today. We've got more ahead on the Asia trade. This is Bloomberg. Founder of Chinese edtech firm Squirrel AI thinks the DeepSeek boom earlier in the year helped make people, especially parents, more aware and accepting of AI. Derek Lee spoke exclusively to Bloomberg on the company's expansion plans and the impact of China's 2021 crackdown on the edtech sector.
Actually, that policy gave us time very hard like hell, but indeed, it actually helped us. So when the policy shut down the tutoring center by human, actually it's a very good chance for our AI virtual tutor to boom. Especially at the beginning of this year, everybody know DeepSeek. All the parents and all the kids now, they understand AI more, and they think AI could, or perhaps most probably, to replace the best human teacher.
Now you're at a point where you're looking to expand the business into the US, or you've started expanding into the US, but share or give us an update on how that's going so far.
From the beginning, 11 years before when I started Squirrel AI, our AI center is actually based in US. So our structure and the product, the base is international. It's very also suitable for US market. And I think we want to start it from the mass because, the Asian mass is good. We are hoping that we can have more than 3,000 after-school learning centers in U.S.
We've seen Chinese companies or Chinese tech companies in the U.S. face issues, thinking about, for instance, ByteDance's TikTok, Huawei are some of the more prominent examples. You've certainly taken steps to mitigate any concerns by storing data locally, for instance, working with American franchisees. But is that going to be enough? And what kind of conversations, or have you had any conversations with Washington as well?
Actually, we just started. We haven't had conversation with Washington, but we made our own strategy. That's why we do not entering the school market. We do not try to persuade the education district because that is very hard for us. Why we started from the learning center, the after-school tutoring centers is so that is not so sensitive.
I want to ask as well about your investor base, because your largest investor, or among your largest investors, is Jeff Yass. He's someone who's quite close to Donald Trump or has ties into Donald Trump. Does that help you at all with any sort of regulatory hurdles you could face?
Yeah, sure. SIG actually invested us in 3 rounds all along, like they invest TikTok in 3 rounds consecutively. Of course, the relationship with Trump will be a very good thing for us. So I'm looking very closely how TikTok will do in the next. If they go through very well, that's a very good news for us.
What kind of financials can you share for us in terms of revenue or margins or profit as well?
Last year, our revenue of the distributors reached $300 million, and our gross margin is 70%, and I cannot mention the net margin now, but we will clear it when we prepare to IPO.
And talk to us about that IPO. What's the timeline, and as well, what's the venue that you would look at?
We want to, the time we prepare to IPO is we want to have at least 200 learning centers in US. So we want to start it maybe next year. And we also considered whether NASDAQ or Hong Kong stock market, which is better for us.
There is Derek Lee, Squirrel AI founder and Chief Education Technology Scientist, speaking to Annabelle Jewelers. Well, the latest on the corporate front now, and Uber and Baidu have teamed up to roll out robo-taxis outside of the US. The companies say Baidu's self-driving cars will hit the Uber app in Asia and the Middle East later this year, with Europe and Oceania to follow. Other Chinese firms like WeRide and Pony AI have also struck agreements with Uber to offer robo-taxis on the platform. Nissan plans to end production at its main Japanese plant by March 2028. The Pharma facility currently employs around 2,400 workers. Operations will be transferred to Kyushu as part of the automaker's wider effort to cut costs and reduce capacity. CEO Ivan Espinosa says the decision is crucial to putting Nissan back on track to growth.
Let's take a look at how we're shaping up ahead of the Open in China and Hong Kong at the bottom of the hour. Well, it's kind of a mixed picture at the moment. Chinese futures a little bit softer. Taipei futures a little stronger as well. It's been a mixed picture around the region, but watch for names connected to US banking stocks. They had a very good day of earnings in the US. That is it from the Asia Trade. Markets coverage continues in a moment. This is Bloomberg.